Hey everyone, Brayden here coming to you with a Mickey Views special report where today we are going to be diving into what on earth is going on over at the Walt Disney Company. There is a ton to get into here. Disney just released their Q4 2024 and fiscal full year earnings results, as well as extensive details on their future plans. Wall Street looks to be quite happy with these results, and more specifically, the future year guidance that we just got. So we are going to be digging into all of those numbers, as well as taking a look at the executives' comments made on the earnings call about competition from the soon-to-open Epic Universe theme park in Florida. We've also got some new capital expenditure projections for the next year. Is this for real? Is Disney finally doing something at Walt Disney World? I've got some hard data to show you on that. And to top it all off, we have the latest on the search for a new CEO of the Walt Disney Company. Starting off at the top, the Q4 adjusted earnings narrowly beat the expected $1.10 in earnings per share expected by analysts on Wall Street, coming in at $1.14 per share. More granularly, at entertainment, we can see the box office success of Inside Out 2 boosted content sales revenue versus the same quarter last year. Over at direct-to-consumer, Disney's streaming business, revenue increased primarily due to Disney hiking the subscription costs on their streaming services, as well as moving more Disney Plus customers to the ad-supported tier, which earns Disney higher average revenue per user. At the linear networks, the TV side of things, revenue did decline due to fewer customers, but they also did see higher ad rates. So overall, the revenue at entertainment, it's looking pretty good, right? Well, if you take a look at the income side of things, once you factor in the expenses with the revenue, $2.6 billion brought in on the theatrical side of things in revenue, in the end netted $300 million in operating income to Disney pre-tax. All of those articles heralding Disney's back, their streaming business is profitable. What that actually means is inside of this one quarter versus the same one in the previous year, that $400 million loss in operating income on Disney's streaming business in the last Q4 is now a $300 million gain in this Q4, which is an achievement, no doubt. The issue is Disney is just starting to chip away at the tens of prior quarters of losses getting streaming up and running. So needless to say, it's not a money printer just yet, but it is now on the right path, which is something that shareholders are very excited to see. Further, you can see that subscriber growth over at Disney Plus has slowed over time, and the executives readily acknowledge this, attributing the higher revenue at the streaming services mainly to higher prices and more ads that they are serving their existing user base. At Parks and Experiences, the focus of this channel, my baby, similar story here. In Q4 2024, the parks brought in about the same amount of revenue and income as they did in the same quarter last year. At the domestic parks, there was a slight increase in revenue despite flat attendance, which Disney attributes to higher per guest spending. The notable exception to income being pretty similar to the same quarter last year at the parks is over at the international park segment, which saw a significant 32% decline in income versus the prior year quarter, which is likely due to Shanghai Disney and Hong Kong Disneyland. In China at large, consumer spending has been very poor this year. Attendance actually grew at the international parks this past year, but guests in the parks spent quite a bit less than they did in the prior year quarter. On that topic, the annual results at the parks, Disney's 10K filing with the SEC we get once a year, which we just got for this year, provides some very specific data on how the parks are performing. Attendance-wise, we've observed firsthand that the crowds at Walt Disney World weren't anything crazy this past year, and this report confirms it. Domestic park attendance this year ticked up 1% versus ticking up up 6% in fiscal 2023. So here we can see that indeed Walt Disney World and Disneyland, their attendance was very flat this past year. This trend also extends to room bookings, where Disney's domestic hotel occupancy was exactly the same as last year at 85%. Domestically, the figure we know that the parks executives care the most about is per guest spending. If there is flat attendance at the parks, or God forbid, declining attendance at the parks, where do you make up for that? How do you show growth at your parks for these earnings reports? Well, you need to charge your existing customers more, or just get them to buy more things while they are at the parks. And there, Disney performed on par with last year, increasing per guest spending at the domestic parks by 3% versus the prior year. On the parks expenditures front, Disney's labor costs increased 11% versus the prior year, and their infrastructure cost increased 8%. Increases Disney attributes to inflation as well as more cast members working at the parks versus the prior year. The best trend for us parks fans who actually want to see Disney do stuff and build new things and all sorts of cool stuff like that, capital expenditure at the domestic parks increased 23% in fiscal 2024 to $2.7 billion. Now keep in mind this also factors in the cruise line business, which Disney is rapidly expanding. So if you're wondering, where did those $2 billion go at Walt Disney World? Well, they didn't. There's also the cruise line and Disneyland. If you add up all of the parks around the world, Disney spent $3.6 billion in capital expenditures this year. Now, if we do a little math based on a promise Disney CEO Bob Iger previously made to us, you'll recall the claim was they expect to double capital expenditure at the parks over the next 10 years, cumulatively investing $60 billion in CapEx on the experiences segment, chiefly the parks and cruise line. Well, if Disney spends $3.6 billion a year in CapEx, like we saw this year, over the next 10 years, that would net us only $36 billion invested in expanding the experiences side of the business over the next decade. What Iger and Parks Chairman Josh D'Amaro said a year ago is we are going to roughly double that to $60 billion. Well, very interestingly, if you take a look at Disney's total investments in the parks, resorts, and other properties, everything CapEx this year, in total, that was $5.4 billion. And if we go down a bit here to Disney's comments on their projections for total capital expenditures in the new fiscal year, fiscal 2025, Disney says, quote, "The company currently expects its fiscal 2025 capital expenditures to total approximately $8 billion compared to fiscal 2024 capital expenditures of $5 billion. The projected increase in capital expenditures is primarily due to higher spending at experiences attributable to continued investment in cruise ship fleet expansion and new guest offerings at our theme parks." So if we take Disney's word for it and attribute most of that $3 billion in additional capital expenditure they plan to spend over this next fiscal year to the experiences segment, we could estimate that next year, this new fiscal year we're already in actually, the parks and cruise business will see total capital expenditures amounting to $6 billion, maybe even $6.5 billion. And if you extrapolate that out for 10 years, like Iger and D'Amaro have been talking about for a while, you end up with $60 billion in capital expenditure over the next 10 years spent on parks and experiences. Now, of course, 10 years is a long time. There's going to be new people in charge much sooner than that. A lot can change there. But the point is, for the first time, we have some hard numbers on an annual filing with the SEC that do, if Disney lives up to their projection of spending $3 billion more in CapEx on the parks and cruises over the next year, it actually lives up to what we've been promised for a while now. So needless to say, this is some very exciting news for the parks. The past 5 years of very little happening at the parks, It all boils down to this capital expenditure line graph that I actually put together here, and I adjusted for inflation. What I did is I went through all of Disney's annual reports going back to 2002, parsed out the domestic capital expenditure spending, the money they invested in new stuff at Walt Disney World and Disneyland, and I put it on this chart, adjusted it for inflation, and you can see CapEx dropped off a cliff under CEO Chapek, and it has been ticking up under Iger. However, I suspect a lot of that investment is in new cruise ships, not Walt Disney World and Disneyland big projects. Going forward though, based on Disney's plans for this 2025 fiscal year we are now in, it appears that the spigot is being opened big time, and we should start actually seeing activity on new projects materializing at the domestic parks, which align with the long advertised promise by Iger and DeMauro of investing nearly $60 billion in new parks and cruise investment over the next 10 years, which I have to say makes me take those announcements that we got at D23 a little bit more seriously. And I think this is where DeMauro got his confidence to say at D23, these are no longer ideas, where shovels are going in the ground, all of that. I think all of it boils down to this capital expenditure situation. And you can see the prior investment waves that we got, first with that wave where we got Cars Land over at Disneyland and New Fantasyland at Walt Disney World and the Magic Bands and all of that. And then you have that second wave of investment, which frankly really gave us a lot of content to talk about here on this channel on Mickey Views. I don't know where we would be without that wave of massive investment where we had so many years of stuff opening at Walt Disney World and beyond when it came to things like Avatar, Toy Story Land, Star Wars Galaxy's Edge. There was a whole lot to cover there. Later on, we got Mickey Minnie's Runaway Railway. We also got the Skyliner. We got Tron. But ever since that mid to late 2010s wave of investment in the parks, we have seen everything crashing down on the new projects starting front of things. And that trend reversing here and us getting back to seeing a lot of new things coming to Walt Disney World, it all comes down to this $3 billion per year increase in CapEx at the Parks Experience segment we look to be getting starting this year and then continuing on. If that is sustained through fiscal 2025, 2026, and 2027, that alone is already going to be sufficient for us to see some serious new stuff come to Walt Disney World as well as Disneyland, not to mention a lot of this CapEx also going towards Disney's insane cruise line expansion, where they are in the process of increasing the fleet size to 13 ships from the current 5, which is just wild. During the earnings call, the biggest news parks-wise came from the new CFO, Hugh Johnston, in regards to Disney's outlook on Epic Universe. Listen to this.
Regarding Epic, we did model that into our expectations for the experiences outlook. As I mentioned earlier, the early bookings that we have next summer are actually positive, so that's certainly a positive indicator. We also looked at the history of other attractions opening up and other parks opening up in Florida, and it's generally been beneficial to us. So that is all very much captured in the guide that we provided.
Taking a look at what the CFO is referring to here, which I think has a lot to do with the record-breaking post-earnings stock reaction we saw on Disney stock here, it all comes down to this second page of the earnings report that we just got, and we have not seen anything like this in prior reports from Disney, where they appear to be so confident right now they are providing insight into the projected earnings in fiscal 2025 and even beyond into fiscal 2026. And mind you, this is a company where typically Iger says he's not going to comment on future quarters, what they're looking at. Now they're saying, oh, the next 2 years, we are looking at double-digit growth in many areas of the company. And that is definitely what has made Wall Street bullish here on Disney all of a sudden. Specifically, taking a look at the parks in this respect, we see Disney expects the experiences segment to see 6 to 8% growth in operating income in fiscal 2025 as compared compared to 4% in fiscal 2024. So there is a stark increase in growth at the parks that is expected in this coming year. Interestingly, Disney notes that they expect to see this growth at the parks and experiences segment mostly in the latter half of fiscal 2025. Universal Epic Universe, it opens around halfway through Disney's fiscal 2025. Compounding that, as the CFO stated, bookings at Walt Disney World for next year are up compared to this past year, especially looking at the second part of next fiscal year. Now, we know summer 2024, it was not too impressive at Walt Disney World growth-wise. There were a lot of videos showing it pretty empty at Walt Disney World. Disney is now signaling that next year they are already seeing improved performance, and their expectation is better performance overall, so we can assume there's probably going to be more attendance at Walt Disney World next summer. At least that is what Disney seems to expect. So what Disney's saying here is they do not expect their largest competitor in themed entertainment, Universal, and their new park opening May 22nd, 2025, right down the road from Walt Disney World, to negatively impact Disney's business in any way. Much to the contrary, Disney is already suggesting they expect to see a positive impact as a result of Epic Universe opening, and they are already seeing an increase in bookings around that time. Now, I've been saying this for years, that this is what the Disney executives think about Epic Universe and how it'll impact Walt Disney World. People were saying, Brayden, how can Disney not be investing in the parks in 2020, 2021, 2022, 2023, 2024? What are they doing? It takes years for Disney to build anything. Epic is coming in 2025. Walt Disney World doesn't have a lot going on around that time. They need to get to work. And what do we see? Disney twiddled their thumbs and did nothing for year after year in terms of investing in new projects at Walt Disney World. And sure enough, we take a look at Disney's pipeline for new parks additions at Walt Disney World through 2025 in their earnings presentation, and 2 out of the 4 additions that they have in the pipeline to brag to shareholders about are lounges coming to Walt Disney World in the next fiscal year, and then another is an attraction update paid for by General Motors, and the other is a Disney Entertainment nighttime parade. Now, don't get me wrong, I am hyped for the new test track as well as the new nighttime parade. That is going to be awesome. But as we're talking about Disney just finally starting to open the spigot on CapEx at Walt Disney World in this new fiscal year, it looks like things are going to start happening in a big way here. It's also important to add on to that to note that this is not going to translate in big new Imagineering projects opening till a few years down the road from now. Disney is just starting to invest meaningfully right now. It is going to take many years for anything to actually materialize in terms of new things open at Walt Disney World. Despite this, Disney is signaling that Epic Universe opening is going to help them. And this has been the feeling of the Disney executives since Epic Universe began development. They have been very nonchalant about it. They could not be less worried about this thing, which just seems crazy. They didn't feel particularly animated to invest the past 5 years to have something to rival Epic Universe, because they think even if they don't have anything new to attract visitors, this new park, a competitor's opening down the street, it'll just be a natural net benefit to Walt Disney World's profit and visitation, because naturally anyone visiting Orlando is going to go to Disney, right? And now we have some confirmation of that sentiment from Disney C-suite. Now, I have no doubt that to an extent the executives are right. Epic Universe, it's going to bring new guests and returning guests, and when you're in Orlando, what's the biggest attraction, right? It's Disney. We all think, oh man, I have to go over to Disney. It makes sense. So no doubt Disney will see some benefit as a result of people going down to Florida to check out Epic Universe. However, what I noticed about this CFO's statement we just played there is a lot of their expectation here is based on historical data on how other Orlando attraction openings helped Walt Disney World's numbers. And what I think they're mostly referencing here is the Wizarding World of Harry Potter opening at Universal back in 2010, where Disney did receive an attendance bump as a result, along with what Universal was doing. So Universal attracted down people to check out Harry Potter, and a lot of those families also headed over to Walt Disney World. So Disney did benefit nicely there. What does Disney say in their disclosures before every earnings call? They say past performance isn't indicative of future results. So it's funny here that the CFO is expecting a similar result from Epic Universe based on what happened when competitors opened new attractions decades ago. And the reason I believe that this is very flawed thinking is if we take a look at the 2010 Wizarding World example, right? So families went down in 2010, 2011, 2012 to check out the new Wizarding World of Harry Potter area, which was all the rage over at Islands of Adventure at Universal Orlando. Now, mind you, Universal was much cheaper then compared to now, and also a single day ticket to the Magic Kingdom, where if you went down for the Wizarding World and said, oh, I want to go over to Disney today, I love the Magic Kingdom. Well, a Disney ticket was $79. So if your whole family of four that's down in Orlando to check out this new Harry Potter world, to do an extra day over at the Magic Kingdom at Walt Disney World for your family of four, that would have cost you $316. Now, if we go to next year, families going to Epic Universe, first of all, Universal's got all these new hotels that are right around Epic Universe itself, where you can stay in the bubble. There's all these ticket packages enticing you to stick to Universal's parks during your stay. And none of it is cheap. So families are already spending a lot on their vacation to go check out Epic Universe in particular, the new park that nobody has experienced yet. And then, let's say in the same scenario as back in 2010 with Wizarding World, a lot of families say, hey, you know, we're down here in Orlando, we're checking out the new thing at Universal. What would it cost to go over to Disney for a day? Well, a single day ticket for the Magic Kingdom the week after Epic Universe opens is $184 per person, almost double what it was back when Harry Potter opened. And this is what the executives are looking at, expecting the same results in 2024. And no, inflation does not account for any of this. The 2010 single day ticket at Walt Disney World for $79, that would be $114 in today's money if you just went off of inflation alone. So the fact is, both Disney as well as Universal, they have hiked their prices significantly over the past decade. They have priced a lot of people out as is. And what I think all this does, a trend that I don't think Disney fully taken into account, is when one of these two has a big new attraction and you have Epic Universe over at Universal, and that's the new thing that everyone wants to go check out, and people are spending all this money on travel to go and do everything there is to do at Epic Universe, and that ticket also includes several days at other Universal parks. That's the vacation budget for a lot of middle class and upper middle class families right there. That's it. That's all they're going to spend money on. And over the past 10 years, Disney's hiked their tickets so high, even factoring in inflation, and has so little new to offer now and for the next couple of years. I simply foresee this scenario not being anything like the historical trends that the executives are citing and resting their laurels on. How many times have we said, Disney, do something? We said this every year throughout the 2020s so far. Now here we are halfway through, and they're finally starting to get the ball rolling here, and we will have a lot more to say on Disney's expansion plan soon. So make sure you're subscribed to our channel to stay on top of all of that. But Disney is very late to the party. And I think Disney's just totally missed the boat on having a competitive offering to attract Epic Universe travelers. They don't have a big new ride that is coming in 2025 or 2026 that is going to compel people to spend an extra $200 per person to go over to Disney and spend one day there. You know, they're asking a lot, and they're not delivering anything new that is going to attract that audience that is there for the new stuff. That's why they're going to Epic Universe. So Disney really missed big here, not having something set up to offer guests to bring them over from Epic Universe when that opens. And also the pricing side of things, it is just not helping win over vacationers, primarily focused on doing things outside of the Disney bubble, as will be the case next year. So at the very least, this is a missed opportunity on Disney's part with Epic Universe, if not something that actually adversely impacts their performance in future years if Epic Universe lives up to the hype and we see a trend towards visitors opting to stay in the Universal bubble for the duration of their trip, as opposed to that Disney bubble that has paid such dividends for Disney in the past, much to Universal's chagrin. Let me know what you guys think about all of that. Last up today, we've got some new details on the search for a new CEO of the Walt Disney Company. Disney has announced they plan to replace Bob Iger with a new CEO in early 2026. Worst case, Bob Iger's contract does run through the end of 2026, where he could be in his current capacity. Not to mention his contract, I believe, also does stipulate that he will be able to remain on in a non-CEO advisory capacity at Disney HQ into the 2030s if he so desires. So Bob Iger, he isn't out of the picture just yet, let's just say. It could go the other way as well, though, in terms of when we get a new CEO. So right now, Disney's saying we're going to get a new CEO in early 2026. Something interesting is in a recent CNBC sit-down interview, the previous board contender Nelson Peltz, who waged a proxy war earlier this year, he put out that his suspicion is we could have a new CEO at Disney sometime as early as late 2025. Helming this operation is the recently added Disney board member James Gorman of Morgan Stanley, who will become the chairman of the Disney board at the start of 2025. Gorman, who is presently executing a succession process over at Morgan Stanley, which involves Gorman himself leaving the bank, he will soon be solely focused on Disney and the succession planning committee that he already chairs at the Walt Disney Company. Candidates inside of Disney that might get the CEO spot are under consideration. CNBC reports Disney's board has been meeting regularly with its 4 internal candidates, which are entertainment co-chairman Dana Walden and Alan Bergman, along with Disney Experiences chairman Josh D'Amaro and ESPN chairman Jimmy Pitaro. Now here's where it gets interesting and a little scary if I'm being honest. In a new report out from the Wall Street Journal, we discover that Gorman is working with a recruiting firm, an outside firm, to identify and bring in potential outside candidates to take over the Walt Disney Company, including those in fields outside of media and entertainment. And the only name we got in that report is Andrew Wilson. This is one of the guys they are looking at from outside the company that might take over Disney. Andrew Wilson is currently CEO of the game company Electronic Arts, who previously interviewed for the top job at ESPN, which he didn't get, and reportedly more recently deliberated with Bob Iger on possibly selling all of EA to Disney, which ended up not panning out. Since then, Disney entered a strategic partnership with Epic Games to develop a larger presence in Fortnite, so Disney does have some interest in the gaming side of things. Given EA's recent reputation for microtransactions in games, poor reception to new additions to their valuable franchises, for parks fans, this kind of guy being the arbiter of what happens at Walt Disney World, I just don't think a pick like this would be very good. You thought Chapek was bad with the nickel and diming. I mean, at least Chapek knows the parks. He knows what we think, all that sort of thing. Now imagine someone trying to nickel and dime us who knows nothing about the parks or the culture of the company or anything like that, any of the traditions at all, and cares even less than Chapek and even less than Bob Iger about the brand's reputation. You know, this guy is heading a company which in years past consistently won the award for the most hated company in the world. So that kind of guy leading the Walt Disney Company, I think would probably be bad news. The other news we got in that report is that the recruiting firm has identified at least 2 more potential external candidates. So perhaps those ones are ones that fans of Disney will be more optimistic about once we hear those names. We can pray at least. As far as what I think about all of this, I recently said on X that I personally hope the candidate is one from the inside and there's just one CEO. Frankly, the reason why I'm for these internal candidates is because I just think the external candidates are worse. We have enough spreadsheet executives inside the company as it is. We don't need any more people with industry thinking and preconceived notions. The last thing we need is even more more disconnected spreadsheet executives from other companies. At least our spreadsheet executives at Disney are our spreadsheet executives, right? They might be nickel and diming us, but they are from the company. They have been around. They do know what the company's all about. Now, Josh D'Amaro, if I had to pick one candidate from inside the company to lead as CEO, I would personally pick Parks Chairman Josh D'Amaro. That is the one I would pick. And I know his tenure as chairman of the parks has not been great at all. He has not done a whole lot for us. And all the, we're thinking of ideas and just sitting by and letting Chapek do all the stuff with Lightning Lane and all sorts of other weird policies that have lingered or gotten worse over time. Parks Chairman Josh D'Amaro has overseen all the price hikes and all of those sorts of things. You know what I think it is with Josh D'Amaro is I think a lot of this is just him politicking for the CEO job. The reason that we don't really like him is that he really hasn't done a whole lot. And can you really blame the guy? I mean, look what happened to Chapek. When he was very hands-on with the parks, what ended up happening is, he got thrown into the CEO spot and he flew way too close to the sun and off he went. It was even worse for the best recent parks chairman we had, which was Tom Staggs. He was very pro-consumer. We had projects like Magic Bands, which were awesome for us. But then the higher-ups, led by Iger, they laid all this down at his feet, where some of these projects that we really liked, they weren't as profitable as they were supposed to be and things like this. And they blamed it all on him, and they eliminated him as a possible heir apparent, and off he went. And on that topic, if we could pick anyone, since Tom Staggs was forced out of Disney, he went over and started Candle Media with Kevin Meyer, who also used to work for Disney as well. And it's this kids entertainment brand, which has done very well. It's very successful. They would be great leading Disney. I would love to see that. That would be awesome. Now, if we want to go even more off into fantasy land, I mean, ideally a CEO of Disney would be someone like Joe Rohde, a creative and Imagineer. Joe Rohde would be awesome. You can go on and on into ideal world type scenarios. On my tweet, a lot of people replying or saying, oh, what about this? What about that? And it's all stuff that it's not going to happen, right? So when I say I want someone from the inside running the company, I'm speaking in terms of, the candidates that we actually have. You can either take the EA guy from outside the company or Parks Chairman Josh D'Amaro. I would rather pick D'Amaro to be CEO if those are our options, but there are definitely better options out there, like Tom Staggs, for instance. But my concern is on the Josh D'Amaro front is I just don't know how much the studios people like him, the board likes him, these investment firms that own most of Disney, how much they like Josh D'Amaro. It could end up being like what happened with Staggs in the end, despite D'Amaro seemingly intentionally trying to do the opposite of that and being very choosy with what he puts his name on, really trying to be in the right position to get the job and not have anything that's really gonna, make him lose points or anything like that. I'm just concerned they'd rather go with an outside candidate over Josh D'Amaro. And this one external name that we've gotten thus far, the EA in-games purchases guy, oh boy. So hopefully we hear some more names soon that inspire more confidence. But if you are looking for some silver lining here, it seems that a lot of people think that James Gorman, who is in charge of the succession process, is very good at what he does. Even Nelson Peltz, the proxy war guy, the Disney's doing a bad job guy, he was singing Gorman's praises last week at an investor event, which was quite interesting. So we will find out soon just what this succession planning committee is capable of and what the board is capable of with Gorman at the helm. My main hope with the new CEO is that they actually get to be the CEO and they actually get to be in charge and take Disney in a new direction, no matter who it is. We need a situation where the new CEO is allowed to do their job and Iger isn't looming large. The crazy stuff we saw under Chapek as CEO, where Bob Iger kept the CEO office and was hanging out at Disney HQ all the time and was still the executive chairman most of that time, and the rest of the time was still on the phone with people at Disney, trying to coordinate stuff. So, if you take a look at Iger's contract, this prospect that he might be hanging around Disney HQ as an advisor into the 2030s, like has been reported, it is important to say, Mr. Iger, let someone else lead for real this time. I get that there should be a settling in period and that you have a lot of insight to give, and all that stuff is good, all that stuff is great. But previously under your leadership, leadership, you announced many times you were going to be stepping down, and then mysteriously the heir apparents got eliminated from the company. And then when it came time that you actually did want to step down, you threw Chapek in there, and it was a total mess. And now here we are with some third-party recruiting firm searching for an outside CEO, including ones that aren't even in this industry, in media and entertainment, to possibly be at the helm. By the way, I also recall that was Iger's criticism of Peltz, saying he shouldn't be on the board. He said he didn't have enough experience in media and entertainment. Now they're talking about putting in a CEO, the new guy in charge of Disney. He might not even be someone from media and entertainment. So it's not the most ideal situation here, but we will stay on top of it, and hopefully we'll be in for a good outcome. And I am very excited to see that stuff with the CapEx that I'll showing you guys, where it looks like, based on what Disney's saying, we're about to see the next big wave of investment at the parks begin here. The next big bump on that line graph that I laid out, which if true is going to be awesome and very exciting news for fans, as well as for this channel, providing us stuff to talk about. So be sure that you are subscribed with those notifications on to stay on top of this and all of the latest Disney news. Also, if you'd like to support the creation of these videos, they take a lot of work. Be sure to check out patreon.com/MickeyViews, where you too can become an executive producer credited at the end of these videos. Thank you so much for watching. From the Mickey Views Magic Studio, this is Brayden. Have a magical day.